you should be able to buy. And again, I'm a living, breathing example of this. You should be able to put 20% down, and you should be able to walk away from that property. It should supply you cash flow and support itself from day one moving forward. You should never have to put money into that investment further.
Hey guys, how's it going? Russell Westcott here. I'm going to keep this one short and sweet, tight, and to the point. In this episode that you're about to watch, we literally covered 3 big giant topics in one episode. So if you're interested in the Edmonton marketplace, we do a killer update with my business partner, Jason Mattern, and myself. If you're interested in finding out the 3 biggest variables that will sink the financial performance of your property, or if you're interested in the 3 pillars of real estate investing success, stay tuned. All that is upcoming. Let's go. All right, everybody, welcome back. So welcome back to the show. Welcome back to the show, Mr. Jason Mattern. How you doing here today, brother?
Hey, Russ, doing great. Thanks for having me once again.
Hey Jay, this is a three-peat. You're on the show a 3rd time, and so let's put it this way: it's by popular demand that people are requesting that you do come back. So hope you're doing well. How are you doing well today, Jay? Are you doing all right?
Yes, it's you know what, we're experiencing some crazy weather in Edmonton, but you know what, as usual, Russ, the sun is shining. We got clear blue sky, and sounds like cold weather's on its way. So all good.
Well, it's interesting. I'm making it so formal. Like, we haven't talked for a long time. Like, guys, Jason and I truly talk, if not every day, every second day. And I've often joked about, as I go, Jay, we're all these wonderful conversations that we're having. We're leaving all this amazing inspiration and wisdom and real estate knowledge. We're leaving it just between you and I. So that's why we actually have now formalized a weekly time that Jay and I will get on a recording like this, and we're just gonna put down some fire and just put down some really good videos and podcast episodes, and we're just gonna give you guys some inspiration and some knowledge. So, are you down for that, Jay?
Oh, Russ, that sounds great. I think the one constant we can all agree on is change, right? And, the real estate market and investment real estate has seemed to be a living, breathing thing over the last 5, 10, 15 years. And you know what? It's been probably more change in the last, 8, 9, 10 months here with COVID environment. And I think at the end of the day, as you alluded to, we just want to maybe bring people up to speed and maybe put a point of view on it that maybe someone hasn't thought about. And it's just information, right? It's just information. Do with it what you will. And you know what? I think we're happy to share it, right? It's all good.
Absolutely. And this is where it's actually going to start off with my first question is, I saw a stat, and I think I saw it yesterday, that across Canada, now we're going to dive into Edmonton, but this is a Canadian stat, that the inventory of houses for sale is at its lowest it's been in 30 years. Is that statistic holding true in Edmonton right now?
Yeah, I think, I don't have the exact stats in front of me, Russ, but I mean, at the end of the day, we've seen record sales in Edmonton now since July. We've almost set consecutive records, July, August, September, October, and then again into December again. And this is just, something that we weren't prepared for, I guess. Looking back 8, 12 months or whenever the COVID back in March, and looking at some of the economic reports that we were seeing at the time, we were seeing forecasts really from CMHC where they were forecasting a price drop of 8, or 9 to 18%. I can't remember the exact numbers, but quite frankly, the opposite has happened. We've seen, record home sales, which has led to, price increase because it affects the old supply demand situation. And in Edmonton today, I can tell you the home buyers are still absorbing. Our absorption rate is still very strong. And it even continued through the holidays, which was kind of weird because usually we, were able to take a couple weeks off but we were still submitting offers and getting offers on our listings throughout the holidays, which is great news. So I think, I guess to answer that question, I'm careful because saying the Canadian real estate market, that's like saying what's the weather like in Canada. And Edmonton is its own little marketplace, I guess. So things are looking very good here. Now, just to build off that, what I will say is where we're keeping our eye on things moving forward is probably coming into our spring market here now, and just to see the amount of listings that pop up and see if the absorption rate is matching that. If we get a lot of listings and the absorption rate is there and we're keeping, balanced, that's probably a pretty good indicator that we're getting into, a balanced and maybe even potentially a seller's market in due time. If we get a lot of listings and, we see the inventory levels remain high, it's probably going to be an indication that we're not quite there yet, right? But you know what? The good news with the real estate market, it is a living, breathing thing, but it's slow, Russ. We can, I think, read these signs if you know where to look, and we as real estate investors can react to that accordingly, right?
So I guess if you can really kind of consider it as with what's happened with COVID, it's almost, I know you and I shot a video probably about 4 years ago now about the best time to sell your house when, the spring market starts going. It's usually in February, the home shows are coming on, the first warm Chinook comes through, all that kind of stuff. Is that going to hold true, do you think, this year? Or is it just all bets are off really of what's going on in Edmonton?
Well, I guess both answer that. When I say it's holding true, it's held true right through, since July, August. Just the throttle hasn't, we had maybe just a couple days over the holidays where it slowed off for a bit and the phone quit ringing. And I think really with just people being at home with COVID and everything else, and, they are inquiring and looking at these things that maybe when we're busy in our normal environment, we don't normally look at, right? But I think the spring market every year, I think it's happening earlier this year. I think we're already off to an amazing start, and there's just right now there's no indication that it's going to let off with the low interest rates and everything else happening, right?
Yeah. So, and Jay, you've also, I do have a couple questions here. So guys, just as an FYI, as a course of action, there could be 3 episodes that are going to come out of this one as well. I have 3 big giant topics. One is going to be an Edmonton market update, and then also a couple really core training concepts that Jason is famous for that he actually taught me, and I'm going to be sharing this information with you guys. So, okay, so Jay, so still staying on the theme about what's going on in Edmonton, and this is one of the conversations that you and I have had. Are you seeing an influx of international money coming into the Edmonton real estate marketplace right now?
Well, I don't know if the word is influx. We're certainly seeing interest and appetite, and we're seeing international investors from the other side of the world. When we say international, coming and investing in Edmonton real estate, and I'll use the term aggressively. And we've got people, even at a national level, a lot of people from Ontario, a lot of people from Vancouver. I think the cash flow situation in Edmonton is very attractive. We're getting great cash flow. Our purchase price is relatively low compared to the national average, if not really on the low end of the scale. The rental market is very strong here, and I think it's just continuing to get stronger. We're really seeing it at a personal level, I say, with some of our rental turnovers that we're having, we're actually being able to implement rental increases. So the purchase prices have, quivered a little bit, the rents have gone up. The interest rates are super low, as we all know that fact. So it's just led really to increased cash flow. And I think that's the driving factor, in international investors. It's been a while since I've seen that, Russ. I mean, we've seen it back in 2006 and 2007 where people were, interested in Edmonton real estate. But we're seeing, people, aggressively coming in and buying waves now. And I'm just not quite sure what to think of that. I mean, I think overall for your marketability and selling real estate, it's a good thing, but where's that going, I guess, long term,
Yeah. So, and Jay, as somebody who has exclusive homes for sale, and there's lots of inquiring from capital from all over the world, I guess, how do you think about that? You just say thank you, correct? Right?
Well, at the end of the day, it's still got to find the right property. But
Yeah.
I tell you, with the last, several years in Edmonton has not been easy. It's been limping along. And, we've been very, very fortunate to have so many great investor relationships across the country and, even around the world to some aspect. But I guess any time when you have multiple buyers sitting there clamoring for your product, it's a great thing. Like I say, we're enjoying it. However, we're not taking our eye off the ball of, being able to still procure the right stuff.
Yeah.
for our
Well,
investors, right?
Well, it's been 12, 13 years since that's really occurred, has it not? And I know in one of our other videos, now, guys, just as an FYI, one of the reasons why I'm asking this question is on my podcast and my YouTube channel, my second most listened download podcast and second most watched YouTube video is the one that Jay and I did with Why Edmonton, Why Now Real Estate, right? So there's a lot of people inquiring and want to hear an update on this as well. So, okay, so international money is coming in and they're buying houses, and they're buying houses in fairly large quantities too, are they not, Jay?
Yeah, it's not onesies and twosies. We're adding a zero to the backside of that, and just getting to know these individuals and what investors are trying to do. Obviously, we've got a little bit of a long-term plan that we'll establish to be able to maneuver financing, to be able to stagger properties out, and to be able to attract tenants. So it's just kind of a nice domino effect of things taking progress. But we're seeing investors coming in, really acquiring 20, 30 units at a time. And in some cases, we're doing some larger multifamily projects that are upwards of 200 units at a time. So, like I said, it's been a while since we've been in this circumstance, and 12, 13, 14 years, whatever it's been. But, we'll see where it goes. Like I say, I almost feel unsettled yet, Russ. And why I say that is because, this whole COVID thing is throwing everything for a twist. And when we sit here as investors and we look at, economists that we, follow every day and follow on Twitter and follow news feeds, and they're forecasting the bottom to fall out. And you know what, that very well might still happen. But, it's just been almost, like I said, a complete opposite that's happened in Edmonton. And when I talk with other investors from Vancouver and Toronto, I don't think the throttle has let off in those markets in the real estate market either. I can tell you, quite confidently talking with these individuals, it appears that Edmonton is at a completely different end of the market cycle than a Toronto or Vancouver. And, I think the mainstay in Edmonton is we've got, great cash flow. Mortgage principal reduction is going to be a constant regardless of where you're buying. But it's that capital appreciation aspect, I think, is where, we're really poised for a lot of upside moving forward. But as I said, it seems unsettled, and there's a lot to play out with that yet.
Yep. Yeah, absolutely. Now, Jay, you've been on record. I think we even recorded it as well, but you've been on record of saying that in Edmonton, you believe that there's going to be a new housing shortage, a new homes shortage on there because of lack of land, lack of serviceable land that's available. Are you still seeing that trend, and are you still sticking to that story?
It's probably not so much of a trend, Russ, as a reality, and it's maybe even happening quicker than we anticipated back last fall when we were talking on a video and we said, "Hey, there's a land shortage coming," and just talking with our builder and our land developer relationships. There's going to be a gap, and the gap is serviced land. We're seeing builders have chewed through inventory at record levels over the last 6 months as well. Along with MLS resales as well. So most builders are sitting where they're washed out of spec inventory. They don't have any standing inventory, and most of them are in, a pre-built environment now. What's going to happen is there's only so much of that land available this year, and once that sells, there's going to be a gap. And understanding, I guess, the development side of when they can develop and when they're digging in the frost of when it comes out of the ground. It's probably going to be late fall, August, September, October, before builders will get their opportunity to get more serviced land. So if you're looking at when that serviced land actually comes on, and then there's going to be another 8 to 10 month gap probably before the house is even built, there's a significant gap of probably almost 12 months being able to get new homes, that we're forecasting. Like I say, it's becoming a reality where we're seeing, builders now that, we're already to a point where we're selling into land positions that the development's not even done yet. It's a piece of dirt yet, right? So the good news for real estate investors is, we've still been able to lock in our prices today, as the builders are tendering their prices and getting, the prices for services and supplies, in order for themselves. And, we're still able to lock in our contracts today and our prices today. But the closings really, Russ, we did some last week already. that was scheduled into February 2022 already for completion. So
Yeah.
it's happening.
So just so I can bookend this and summarize this. So why, Jay, why is it important that we know that if there's going to be a shortage of new homes that come on, that, especially if the demand is strong. Let's think about this. This is my 6th grade Saskatchewan education coming in. If demand is still strong of people buying properties and the supply is really, really low, if not, it's non-existent, right? That to me bodes well for a market that's going to go up in price, and it's going to ripple out into the resale market, and it's going to lift all the boats up, and the price is going to go up. Would you not agree to that?
Well, again, Russ, it's already happening. I mean, some of the discounts, and you know this because you bought some stuff in the last year. So I mean, we were getting some heavy discounts, on some new construction, and in the resale market, some heavy discounts. The stuff in the new construction market now, we're not seeing the big heavy discounts that we were. There has been a round of price increases based on softwood lumber prices that happened back in about August time, early September. So we've officially seen a price increase across the board. A moderate one. It's not a crazy one, but when you start getting that old supply demand in out of balance, I guess, if you will, at a builder developer level, I mean, it's just business 101. They're going to, most likely take advantage of that and profit as they can. And so I guess where I'm going with that is, if you're interested in new construction real estate, you can still lock in your price, put your deposit to work. It's a small deposit. And really, we're going to move the closing out. So you're just going to, reserve your spot, I guess, for lack of better terms, right?
Yeah. And for those of you in Vancouver and Toronto and places like that, you would understand what it means to potentially lock your price in today and then close on it in the future in a market that has poised to have some fundamentals that is going up. I don't have to probably put 1 and 1 to make 3 here for everybody as well. So Jay, if you were just when investors call you and talk to you, what would be your best summary about the Edmonton real estate market right now?
Well, I think, and people have probably heard me say this several times, it appears that the moons are aligning in Edmonton finally for, the market appreciation aspect. As we said, cash flow is strong in Edmonton. Today, our purchase prices are still low. Mortgage principal reduction is going to be a constant, but it looks like we're starting to trend in the right direction with capital appreciation. And the one point to that, is to understand that, as real estate investors, our assets appreciate at asset value, not our down payment level. So, and if we're putting $100,000 into the market and buying a $500,000 property, and we see collectively 10% over a couple of years, that's $50,000 in appreciation, not $110,000 or $10,000 on the down payment amount. So, but like I say, that's my feeling, my gut feeling when I see the kind of activity and the urgency that's in the market for people to get into homes. We're seeing our days on market drop. We're seeing all the spec inventory evaporated. It's just getting to that point where it's borderline multiple offers, and I can tell by our sales velocity right now, people are starting to get that, I don't know if panic feelings at the right, or that what's the fear of being left out type thing.
The
FOMO,
kind
of starting to happen already.
Fear of missing out, a little bit of FOMO. So
yeah, it's happening a little bit, right? It's crazy stuff.
Yeah. Well, you know what? Stay tuned, guys. We will keep you updated on this market because that's one of the things that everybody's looking for. Is everybody's looking for marketplaces where their money will work harder for them than they work for their money. Okay. So, Jay, I'm going to transition the conversation here. So before we do transition the conversation, if anybody is interested in Edmonton, what's the best way for somebody to get a hold of you? We'll probably put a link around wherever you're watching this video. There'll be a link to fill out if you're interested in booking a consultation or something like that. But what's the next step in the process if they're interested in Edmonton?
Well, I think we make it very easy. We've spent a lot of time and effort on our website of just giving information on there of our process and how we handle things and how we analyze things, and the property types that we look at. So really that would be step one, is go to our website at TriUrban.com and just check it out. There's numerous ways, Russ, as you alluded to, you probably have some sort of link in the bottom of the video where people can reach out. And, I've always said this, and I'll always continue to say this. It's not about us. You know, each of us as individual investors, and Russ, you and I are real estate investors as well. We each have different plans, and I guess the commitment that I'll make, to anyone is to sit and listen and see if we can help people get what they want. It's about them, and just understanding that everyone's different. I know, we're wanting the same thing, I guess, real estate wise, but where that fits in our individual lives always seems to be different. And until we understand that, and then we can move forward and really make some real good recommendations with properties, right?
Yeah, and you and I have a fun series that we may dive into here. Where we're calling it about, it's not what you see, it's what you don't see. And we're going to go through pro formas. We're going to go through almost like a living case study of here's what you see in a pro forma, and here's what you're going to see in real life, the performance of a property. It's almost like comparing pro formas to financial statements. And guys, sometimes you can see a pro forma and you can look at the numbers and you go pro forma shop and you go, wow, this looks fantastic. And it just ain't so when you start owning it, right, Jay? So give me some insight on, this was a concept that you and I were just chatting about this morning about doing a little segment about that. It's, it's not what you see, it's what you don't see. What's your thoughts on that?
Yeah, no, I mean, again, there's been probably several of people listening have heard me say this, hundreds of times before. And I see this, and I guess this is why it's probably important information to maybe talk about, Russ, in an open forum, is we're seeing people come in and what I call pro forma shopping. And, they're looking at a piece of paper and, looking at the cash flow is amazing, and they're getting, they're buying the property based on that. But, I've always said this is the fun, easy part about investing and acquiring the property. And then what happens is the thing gets built, or you buy it within a couple of months, you're going to get handed a set of keys, or your property manager is. And at that point in time, if they can't rent the property because something's not quite right with it, what? Let's put it this way. Real estate investments work best when they have a tenant paying good rent in them, right? So if you're susceptible to vacancy or repairs and maintenance after the fact of closing on the property, that's going to chew into your cash flow or maybe into your seed capital even further. It's to me, it's not a good plan. It's not something that I would move forward with. And I guess, at the end of the day, this is, as you allude to, what you can see or what you can't see. What we can see on the pro forma should be step one. That's screen number one, making sure the numbers should work. And then we kind of need to take it over to the property and the location and focus on the tenant profile, our customer, who's going to be paying us rent every month, and try and align those dots, so again, 2, 3, 4, 5, 6 years down the road, your financial statements reflect success. Because once you close on it, Russ, that pro forma, what you can probably do with that thing, right? Run it through the shredder. It's really it's a projection. Now that's where the rubber hits the road, and we need to make this a reality. And that's where my brain goes to say, okay, let's focus on the long-term viability and how our investors' financial statement is going to reflect over their term of ownership. Yeah. And that's where the difference is, right?
Well, and this is the story you hear most often, is that, I looked at the pro forma, the numbers look good, and then all of a sudden after I've closed on it, my property manager who was trying to rent it, my rental agent was trying to rent it, they couldn't even, they're going, what are you smoking? There's no way you're ever going to get that kind of rent for it. And but you have an experience of the opposite thing, Jay, you've had, and you were just sharing with me, and I don't know how many clients it was, but it's probably been the last 4 clients that they've actually had the opposite experience. So share that with everybody here as well.
Well, I won't say last name, but Ian, if you're watching, you would be a live example of this, where, his properties just got rented. He just purchased a new grad suite property, and what we had on a pro forma, and actually what the property manager, what the management team got him was, literally hundreds of dollars more than what we said. And at the end of the day, that's great. I haven't had anyone yet, Russ, that's got mad at me for getting extra cash flow, right? But at the end of the day, the picture I want to build is the worst case scenario. And let's fly into the deals with our eyes wide open, and let's build that worst case scenario, because if people are comfortable with that, chances are, based on our track record, you're going to get more than what is projected up front. And that's always a good thing. That's, where we want to be. And those numbers, my friend, are the ones that are going to reflect on a financial statement moving forward.
Yeah,
right?
Absolutely. And that's good. That's good for business when the client closes on the property and they actually will get more revenue than what the pro forma said. And guys, I hear it all the time. And I don't know how many times I have consultations with people that the comments come back as just, yeah, I just couldn't rent it for what I thought I could get for it, and yada, 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 all that kind of fun stuff. But the good news is here is, and it's a function of the market in Edmonton that the rents are going up. And it's also a function of you putting some conservative estimates and worst case scenarios in the pro formas you send out to people. So guys, stay tuned. There's going to be a whole segment where we're going to talk about pro forma shopping, if you will. Here's what you see and here's what you don't see. And I think that will be, I'm looking forward to that segment, because here's what you got. You got two people with 40 years of real estate investing experience, hundreds of properties, millions of dollars of transactions, which is going to share with you what they see on the ownership side of properties. Okay. Transitioning here a conversation, Jay, I do want to get into one education piece here that you're famous for. And I learned this one from you. And it was I give you 100% credit. And sometimes when I do share it, I don't know if I give you credit every time for it, but the first time I ever heard this was from you. You talk about your three pillars of real estate investing. Can you share that? Can you share that theory and share that concept with everybody here watching today?
Wow. Okay, that's.
And Jay, we're gonna try to keep it under. We'll keep it under 15 minutes. But here's the cool thing: is if we need to expand on it, which I honestly think this could be an entire weekend workshop. It really could be. It could be a weekend workshop on these three pillars that Jay is going to talk about. But what we're going to do here today is we'll just share the framework with everybody.
Yeah. So let me give you the highlights on that, Russ, and thank you for the opportunity to share that, because I have this conversation so many times with people, and it's maybe just again a different look at it, and maybe more of a long-term look. As I've always said in this, when people are acquiring real estate, it's the fun, easy part. And then it rolls into, management 101 and long-term ownership. And if we can mitigate, the issues, I guess, and the potential issues and cash injections down the road on day one, that's what we want to do. So the three pillars are quite simple, and it's what you buy, it's where you buy it, and who you put in it. And our focus, Russ, when we talk with a customer, is obviously understanding, where their financial goals are. But when we start zeroing in on a property, we really focus on that third aspect first of who we're putting in it, because that's our long-term customer that we're focusing on. And what we want to do is we want to, understand who we're going to put in it. And we want to understand what's their budget, what's their profile, what's their dynamic, right? Where are they working? What do they want to live in? How big? What types of appliances do they like? And once we understand that, we can go and, select an area and build a home that will attract that specific tenant profile. Because I see it time and time and time again, people pro forma shop, I'm going to keep using that word. And then all of a sudden what happens is, that tenant leaves, and then they try and attract another one. And, it's not the person or the customer that they maybe actually wanted to do long-term business with. And I think what we need to understand is, as owners, our tenants are our best employees, man. They're taking care of a very important asset for us there, and they're paying us to do it. So would it not be a little bit of a wise thought to maybe pause at this stage and just say, okay, who do we actually want to have a relationship with long term, and connect the dots from beginning to end so we consistently and repeatedly can attract the same result?
Yeah.
Instead of trying to jam a square peg in a round hole, right?
I 100% agree. I'm continually amazed when I have conversations with people about, and I'll ask them the question is, who's your tenant? Like, who's your ideal tenant? What tenant profile are you looking to put in? And most people will never, ever give that consideration to what their tenant profile is. As a matter of fact, in your model of the three pillars here, Jay, you actually state that it starts with the tenant profile. And then once you understand who your tenant is, right down to, let's use an example. Your properties that you buy personally, Jay. Do you know your tenant profile? Tell me about the profile of the tenants that you rent to.
110%. So I buy single family homes with no basement suites. And my tenant profile is a mom, dad, a small child, maybe two, right? Dad works in the service industry, makes around $100,000 a year. Mom is typically a stay-at-home mom. She drives a 2-year-old SUV that sits in the garage. Dad drives a Ford F-150 or a 3/4 ton diesel that sits outside. And I know these people can afford in between $1,800 and $2,200 a month rent. And I know these people tried to buy a house and maybe can't buy a house because they don't have the 5% down payment or a family member to lend it to them. But more commonly than not, these people can't buy a house because their consumer debt situation. So maybe that 2-year-old SUV sitting in the driveway, the $648 payment on it, that's for 42 more months, is putting their debt coverage ratio offside, so they can't buy. So these people typically stay with us 3 to 5 years at a time. And when they leave, they're typically going into home ownership. We're that last stopgap between them and home ownership. You want me to continue on? Because I got more about them. But anyhow, this is where you need to understand our customer. And then when we build a property, Russ, and I know the mums in our properties, they absolutely want the double door refrigerator with an ice dispenser and water dispenser. This is the stuff that they like. So who am I to tell them any different? It's not what I want. I'm not going to be living there.
Yeah.
It's their home, right?
Wow. Time out, guys. Do you guys sense how clear Jason is on who his tenant profile is? And then the next step. So that's a perfect example of how the 3 pillars: what you buy, where you buy, and who you put in it, meaning who you rent to. So you actually determine the tenant profile first. And then now you've already started transitioning into the type of property that's going to fit what the tenant profile is. And then you pick the area that fits all that. And you actually have a perfect customer in the right asset, in the right neighborhood. Would that be a good way of summarizing it?
Yes. And time after time after time, when that tenant leaves, when you light the marketing back up, guess who you attract again? You're attracting the perfect customer that you want living in your property. And there's so much more to that exact tenant profile of why we've chose that, over the course of a term of ownership of 10, 15 years of dealing with people like that. But they're just stable. To us, they seem stable. They pay their rent. If they having trouble with it, they're on the phone and, almost in tears that they're behind. And, they take care of their homes. Typically when these people leave, it looks like just, it looks good when they leave,
Yeah.
So it's running a very efficient model for us, right?
Yeah, it's treating us like a business, guys. Most people, like I said, don't think about the customer. The customer is your tenant. That tenant is going to be paying you upwards of $25,000 a year or more. So you better know who they are. You better know how to treat them well. You better do that. And I know when we walked through some of your properties, it was one of the rare exceptions. We went through one of your properties when you were having a turnover, and it literally was on a weekend. We had like a day to go through it. And that property looked brand new, and it was 5 years. You told me the last tenant had lived there 5 years, right? Is that typical for you?
No, and that was in a half duplex model, Russ, if I remember correctly. And truth be told, the other half of that unit, we bought that in 2013, I believe. We still have the original tenant in that side. But yeah, it's that family tenant profile, and we don't get as much cash flow every month, Russ, in a property where we only have one tenant. We don't have secondary suites, but we run a business still, and we're busy people, and we needed it easy. This is a longer term play and plan for us, and this thing just needed to float off to the side, kind of on its own, in a very low stress, consistent performing environment, and that's exactly what we've created with it.
Yeah, and I envision, like Jay, I wasn't joking when I said this could be a weekend event where we teach people the 3 pillars of real estate, starting with, and the first module is really understand thy customer. And then you build from there. And then there's a whole bunch of modules that, as a matter of fact, guys, if you are watching this or you're listening to this, hold me accountable to putting that on, whether it's post-COVID, we can do it live, or whether we do it maybe over a live broadcast model. But I want to put this together. Are you up for putting some training materials together, Jay?
It's just information, Russ. Like I say, I'm more than willing to share it. It's what the people on the other end of the speaker, whether they're listening to this or watching this video, it's what they do with it, right? And honestly, I hope I can help people succeed. I mean, we've seen a lot of people not succeed in real estate, and real estate's not for everyone. Let's face it. But if
Yeah.
we can share those experiences and maybe save some hard lumps of some new investors or other people that are getting into it, I think it's just the right thing to do, right?
Yep. Absolutely. Now, I'm going to open up another question here for you as well, Jay. And this is something that you and I have conversations about all the time. And these are the consultations that we have with investors. We have consultations, Jason and I, truly almost some days I don't know how we can fit them all in. And at this time, all these consultations are still free. There's no obligation to any of them. We're trying to pass on some information and share what we know to find out if it's a fit for you. So wherever you're watching this video or listening to a podcast, by all means, if you're interested in having this conversation to see if it's a fit, let one of us know by filling out the little form that you will when you click on the link. All right. One more piece of content that I want to share and want you to teach here is when you own a piece of real estate, you call it the three biggest variables, the three biggest costs of owning a piece of real estate. Share with everybody what those three biggest costs are and how can we as rental housing providers start softening those costs, lowering those costs, and having a better ownership experience?
Okay, great question. You're hitting me off the cuff with these today. So, it kind of, I'll circle back to where, the term pro forma shopping again, and it's not what you can see, maybe what you can't see. And over the long-term ownership of a real estate portfolio, the three big variables that can really chew into your cash flow and your seed capital are your vacancy costs, your repairs and maintenance costs, and your management costs. When we look at any pro forma, these are the three big variables that have a big question mark over them all the time. Our mortgage rates are typically fixed. Our insurance is typically fixed. Those are easy. They come in renewable terms, but the vacancy, the repairs and maintenance, and again the management costs are something that can run out of control if not tended to up front. Now the good news is at time of purchase is when we can really have a look and mitigate, if not outright eliminate, a lot of the associated variables that will affect those big three. And just really, repairs and maintenance, for example, we're looking at new construction product for the most part, or a fully renovated product, that is not going to need a roof, or it's not going to need a furnace. So basic, and it's under warranty. So for the first 10, 15 years of you owning this thing, if you're going to own it that long, there should be almost zero repairs and maintenance at a high level. There's going to be some tenant turnover stuff we're going to have to tend to, but the big ticket items are going to be tended to. They're under warranty. They're taken care of. The vacancy kind of circles back to, I guess, the three pillars of just really, understanding what our customer wants, Russ, and finding it and building it for them. And, by doing that, we just inherently reduce our vacancy costs because, when we bring it to market, it's exactly what this tenant profile wants. We can easily rent it. And then when there's a turnover, we know exactly who we're renting it to and getting it back, at full occupancy. Of course, the management cost with that, we need to understand, I guess, and, hats off to all the property managers out there because they really, do a bang up job. But at the end of the day, it's a business. So every time a property manager, turns a wheel effectively, it's going to cost you money. They charge, typically a percentage of the rental income. But if there is repairs that they have to tend to, and manage, it's time. Of course, you have to pay them for it, rightly so. And same with tenant turnover. Every time a tenant leaves, Russ, it costs us money. So just for example, I'm going to throw it out there. I'm going to say it's going to cost us $2,000 at least for any suite turnover, because we're going to have to go in. We're going to have to tidy it up. We might have to paint some things. We might have to repair it. We're going to have to remarket it. We're going to have to re-screen tenants. We're going to have to re-show it, and worst of all, you might have to sit on a vacant suite for a month or two. So if we're making a property and buying the wrong property, but let's just say this property on the pro forma makes $500 a month cash flow. Okay, great. That's $6,000 a year. But if you have two tenant turnovers and one suite up and one suite down, and that could cost you $4,000. Well, at the end of the year, your $6,000 cash flow is now only $2,000. Plus, you had all the headache of dealing with that and the time of dealing with that. Now, where that really, I guess, can affect long-term viability in our financial statements, Russ, you and I have often said we can pay for a property inside 15 years. And I still believe that today. I'm a living, breathing example of that. However, in order to utilize that strategy, you need to take your cumulative cash flow that we make on a monthly, yearly basis, and we need to put that down towards mortgage principal reduction. So if we're taking our $6,000 that we can lump down on our mortgage, but we've just, had to incur 2 tenant turnovers that cost us $4,000, and say some repairs and maintenance that cost us another $1,000, you got $1,000 left over. So it's not to me, it's not a great long-term strategy. But again, the good news is, you know what? I am going to have a look at that stuff right now, and we're going to pause, and we're going to, when you're coming to purchase something, this is the stuff we're going to look at the pro forma at step number 1, and then we're going to look at all this other stuff we can't see. Stuff that would cause a tenant to leave, like maybe a shared laundry, or maybe no parking, or maybe there's no good soundproofing, maybe there's not a separate entrance. We just want to make sure everything is in line for when our tenant comes. They're going to have a beautiful stay, they're going to enjoy it, and most importantly, they're going to continue paying us rent. Yeah. That's going to reflect on our financial statements.
Yeah, and that's one of the things, and I know you do this because I'm a client of yours, and I see you doing this with clients all the time. You literally, when you're going and selecting a property for a person, you go there and you put yourself in the tenant's shoes. This tenant here, look, if what you need to do is, we got this corner lot, perfect. That's what we want, because you got all this parking on the side, you got 3 pads in the back, you got all this parking in the front. But here's what's going to happen: the door out the side, the tenant's going to walk across the lawn over here, and you're going to actually probably have more expenses because the grass is going to die. Because this is where the tenant's going to park, closest to the door, going to walk across here. What I would recommend you do is you put a cement pathway here, or you put something here, because you really just truly think about it from the tenant's perspective. And all those things just add up to saving the owner's money. The better tenant experience, the less turnover, the less vacancy, the less maintenance, and the less management issues you will have. That being a case, Jay?
Oh, absolutely. Yeah. And not only the tenant perspective, Russ, it's from an owner perspective too, because, looking at this stuff that I have to deal with, on a monthly, yearly scale, just exactly that, of where the tenants are walking, for example, and where the wear and tear is happening on these properties over the course of a 10-year term of ownership. But you're right. If we can solidify that stuff and take care of that stuff right up front, it's going to make for a more efficient investment. And you know what? Again, I'm going to circle back. If you're not spending money on vacancy, you're not spending money on repairs and maintenance, and you can really reduce your management costs, you're going to be able to chunk cumulative cash flow on your mortgage. Or, take that money as seed capital and invest further if you're still in acquisition mode. But at the end of the day, that money is best utilized in other avenues like mortgage principal reduction or further acquisitions. Investors, yep. Russ, we're talking about financial statements, and this is something that's probably very true across the board. Is I don't know of too many investors that count extra capital that they put into their investment after the fact into their long-term ROI. So, for example, if you have to put a furnace in it and you don't have enough cash flow, so you got to take $5,000 out of your own bank account to put in there. Well, that $5,000 that you just put in there actually inherently just reduced your ROI long-term, but no one ever counts that. Right? You should be able to buy, and again, I'm a living, breathing example of this. You should be able to put 20% down, and you should be able to walk away from that property. It should supply you cash flow and support itself from day one moving forward. You should never have to put money into that investment further. And we can do this right, but we just need to, like I say, get our eyes off the pro formas and saying yes at pro forma stage. That's step number 1. Okay, let's look at the pro forma. And then now we kind of need to take that next step and tie it together in a nice big red ribbon, right? And
Jay,
make it easy for people.
You're putting a giant smile on my face from a standpoint of one thing. It's like you're almost like the good reverend up there, sitting there from the pulpit, preaching from the pulpit. Here's the Bible and fire and brimstone. Good old, you're the Reverend Joel Osteen preaching from the Crystal Cathedral. No, he's not the Crystal. What's his Lakewood Church, right?
Lakewood, yeah. You know what, Russ? I'll chalk it up. Maybe similar to Joel Osteen. It's passion, my friend. It's I'm in this. I live it and breathe this every day, and I see people coming and going and making mistakes, and it's mistakes that they could have avoided, but. We all understand the end goal of what we're trying to accomplish with real estate. Yeah, I get it loud and clear. But please, let's just pay attention at acquisition time and just make sure when you or your property manager gets handed a set of keys in a couple months down the road, that the fun and the success is going to continue. Because that's kind of where the rubber hits the road, and will really determine, again, your long-term success on your financial statements. They don't lie, by the way. Right?
Wow. Jay, I've said this once and I will say it again. And guys, you're probably, if you've been following along, you've heard every episode or whatever. This truly, Jason Mattern, is one of the best kept secrets in Canadian real estate education out there. And Jay, I think you're doing yourself a disservice by only being in Edmonton. Maybe we need to have some plans to grow across the country, Jay.
Hint, hey? Hint.
Guys, I'm doing some tongue-in-cheek here because Jay and I have been having some wonderful, we were recording this early 2021, and we've been having some wonderful conversations about some bigger goals and some bigger aspirations and growing, right? So I'm doing that tongue-in-cheek, and I'm also putting a little, if you will, a little tease out there is, guys, we're just getting started. I'm tired of playing small. I really am. It's time to step up. It's time to start. I've been given these gifts and I've been given these relationships and I've been given these things, I've been given so many blessings that when you've been given so many blessings, you need to be a blessing to others. And what I'm here to do is I'm here to share these wonderful resources like Jason Mattern to the world. And we're just getting going. We have more resources than coming up, don't we, Jay? So final word to you, my brother, here today. What would you want to leave everybody with?
You know what? I think I'm just again, I'm one of you guys. I'm a real estate investor too, and what I'll say is, I'm just willing to share, and I guess I'm willing to open up the phone line for a 30-minute conversation, and if all that results of that is a great friendship, you know what? I'm okay with that too. I had a conversation with a gal this morning, and it was about selling the property, and I just recommended that. Not that I'm trying to talk myself out of a listing, but I think she should hold on for a couple more years. It's not quite time yet, right? But I've always said this, and I'll say it again. It's not about me. It's about what you guys want, and you guys being other investors and people looking to invest in the Edmonton real estate market. I'm just really a guy that's created a business model, that can help you get what you want easily and safely, and that's what it's all about. Just helping other people get what they want, right?
Yep. Can't say it any better myself. So guys, Jay and I have made a commitment that we're going to do monthly recordings when we're going to put this stuff together, and we'll just get it out to you. You know what? We were overthinking it. We had so many. Let's put it this way: we have an entire Asana board of just ideas of things, and we have all these wonderful ideas sitting on this digital platform. And you know what? We just said, Russ, Jay, let's just get out and let's just start recording this stuff and let's just start distributing the message because more people need to hear this. There's an entire generation of brand new real estate investors that needs to hear this kind of wisdom out there, and not somebody who's only got 5 years. No, nothing against somebody who has 5 years experience and is just crushing it. Nothing against you. But sometimes you need to have the experience of people that have been at 20 years, 30 years, 40 years in the business. And that's where you truly get the full picture about what's going on. All right. So with all that being said, guys, make sure you subscribe, make sure you hit like buttons, wherever you're consuming this information, leave reviews, subscribe, follow along. We are only just getting warmed up. Okay, guys, have a great day. Bye for now.
Take care. Bye.
Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.